DeFi is an abbreviation for the term decentralized finance. It is one of the fastest growing sectors of the blockchain and cryptocurrency industry. DeFi is a growing and dynamic ecosystem of decentralized applications, also known as dApps. They provide new and innovative financial services to users, and they are built on top of secure distributed networks on the blockchain with no corporate governing authority and centralized leadership within it as an entity. Majority of all DeFi applications or dApps are being built using the Ethereum blockchain. DeFi has been a major part or component of the growth and development of Ethereum blockchain and ecosystem. DeFi dApps have locked up over $1 billion worth of cryptocurrency, and it's expected to grow further in the coming years. It is a key component in fulfilling the dream and vision of Ethereum as a digital platform of the future. The power of DeFi is that it allows users to access financial services such as borrowing, lending from peer-to-peer, and trading of financial products without the need for centralized entities. DeFi is not a single product or company, but is a digital substitute for traditional financial services ranging from banking, insurance, bonds, and money markets. DeFi allows users to combine services in multiple ways not possible in traditional finance, and this has led to what is known as money Legos due to its composability. For users to access DeFi services, a collateral is usually required and is locked in a smart contract. This is usually referred to as total value locked for each DeFi dApp or application. DeFi dApps are disrupting and revolutionizing traditional financial services by removing the middleman and bottlenecks, thereby making it infinitely more accessible to people or users. It must be understood and accepted that DeFi is still in a very early phase of its life cycle, and many processes are still being improved upon on a daily basis. There are major categories of DeFi, and one of these are lending and borrowing, which removes the barriers to access financial products and services by collateralizing their digital collectibles or assets to obtain loans, or you can generate a yield on your digital assets by contributing to lending pools and getting paid in interest on your digital assets. Stablecoins are another category which is very important as cryptocurrency prices are known to be very volatile. Stablecoins serve as a hedge to the volatility and are important to make DeFi applications more accessible to everyone by having a stable store of value. Exchanges such as Coinbase or Binance are also a category of DeFi. They help users exchange one cryptocurrency for another. They are both intermediaries and custodians of assets being exchanged. Derivatives are contracts whose value is derived from another underlying asset such as bonds, stocks, commodities, and a host of others. Traders can use derivatives to hedge their positions and use it to decrease their risk in any particular trade. Fund management is another category of DeFi in which users oversee their digital assets and manage its cash flow to produce a return on investment. As DeFi continues to evolve, many creative use cases will continue to emerge. One of these creative categories is lottery. This version of lottery allows people or users to pull capital onto a smart contract on the Ethereum blockchain. Once the winner has finally been selected, all lottery players involved get back their initial tickets at no loss to all participants. Payments is also another very crucial part of DeFi because a key aspect of cryptocurrency is to allow decentralized, trustless, and secure transfer of value between two or more parties. With the growth of DeFi, more innovative and creative approaches to payments are being experimented upon. And last but not least on DeFi categories is insurance, whereby users use the blockchain and DeFi tokens as a risk management strategy against losses for an unfortunate incident. Smart contracts are also a fundamental part of DeFi. Smart contracts are programmable contracts that allow two counterparties to set conditions of a transaction without the need for trusting a third party for its execution. We must understand that with DeFi, a whole new financial system is being built from the ground up, and at some point will become the primary financial system of the world. This will happen because DeFi represents the true internet of money. The internet we use today showed the power for universal universal, open network for the distribution of information. DeFi represents the future of mankind in which value transfer will be carried out in universal, open, and distributed networks without intermediaries or bottlenecks. DeFi is very unique compared to traditional financial systems which exist in the world today. It is permissionless, open access, composable, and transparent. In DeFi, you become your own bank and can access credit from code on a blockchain with no central authority or institution required. DeFi, like the internet, will make financial services cheaper, faster, secure, and more easily accessible and personalized, just like what the internet did for information. This will create an easy-to-use global financial system. This will allow anyone in the world to be protected against censorship resistance, self-sovereignty, and instant global accessibility of cryptocurrency while having the purchasing power stability of the dollar. DeFi represents an important milestone in the growth of humanity as many groups continue to be marginalized through financial censorship and imposed hardships and restrictions, often going harder or further than what is required by law. There is a strong possibility that DeFi will replace all centralized financial infrastructure, given that the cost savings associated with DeFi cannot be matched by centralized financial institutions. For centuries, humanity has lived in a world dominated by centralized finance. Central banks have controlled the money supply of societies. Financial trading has always been done through intermediaries, and borrowing and lending has been done through traditional banking institutions. However, in the last few years, this new model has taken root and shows a lot of promise and potential with its growth. In the decentralized model, peers interact with peers via a common ledger not controlled by any centralized entity. DeFi solves major issues which plague traditional financial institutions today. The first is centralized control. In a centrally controlled financial system, one consolidated entity tries to control short-term interest rates and influence the rate of inflation, and this does not always have the intended consequences and leads to unforeseen circumstances. The second issue is accessibility. As 1.7 billion people in the world don't have access to financial services, and due to the low fees made on this class of customers, they are very unattractive to centralized financial institutions. A third issue is interoperability. Most centralized financial institutions are siloed. They do not interoperate. Moving money from one place to another can be a very lengthy and complicated process. For example, a wire transfer can take days before the money is received. DeFi makes this an issue of the past. Opacity is another major issue, as many customers do not know the state of health of their banks and have to place faith in the limited government protection insurance on their deposits. The total implications of all these issues is a lower state of economic growth that affects the entire system. Decentralized finance offers tremendous opportunities to offset these challenges. DeFi offers an alternative to the traditional financial system, which have been dominated by governments and centralized institutions like the central bank, replacing them with borderless, immutable open-source algorithms. An important DeFi primitive to understand is the concept of custody. When a smart contract has received its collateral funds in its vault, a set of new features are unlocked, such as claiming of its own fees, distributing incentives to relevant parties, processing of token swaps, and host of other functions. All these features are a key to what makes DeFi unique. Staking rewards are also received by user based on the amount of capital they have contributed to the DeFi platform or system. Another major concept of DeFi is known as yield farming. This unique process provides access to the many who need financial services and are able to be served by the existing legacy financial institutions. It provides its users with contract-funded rewards from their staked capital or using a set of protocols which are then payable in the same fundamental or unique underlying asset that the user holds, or a distinct asset such as a governance tokens. DeFi allows developers to create new types of financial products and services, thereby expanding the possibilities of financial technology. It must be understood that all new innovative technologies always pose some risk. The risks which DeFi faces are primarily around the innovative technologies which they use, such as smart contracts and oracles. However, there are also governance issues which need to be resolved, as well as scalability and custodial services for its exchanges. These risks must be mitigated in order to make DeFi systems robust and fault-tolerant and planetary scalable. DeFi is one of the most important and disruptive technologies and applications to emerge since the internet. It is still a nascent technology, and we have only scratched the surface. It has the promise and potential to transform society for the better by making it more financially accessible and equitable. Thank you for watching. We would like you to subscribe to get more insightful videos.